Everybody, happy Friday. Someone asked for me to make a video on how I prepare my videos, like how I put the data together in order to go through my Excel file and show you everything. I know, well, I used to have Patreon. I don't have it anymore, actually, but people used to go on Patreon and download my DCF model. But if you want my DCF model, just email me. My email is in the description of the video. But I'll just go through the steps in order to create my Excel file, and it only takes like 10 minutes if I do it quickly and there's no hiccups to create the Excel file, because I got it down pat. Sometimes I have to spend a little time analyzing a company to try to understand it better, but oftentimes I actually don't even look at the company. I learn about it as I'm shooting the video. Like, I'm going through the financials for the first time as I'm shooting the video. Unless it's a company I'm really familiar with and I've been following them, then I kind of know what they do and their background. But if it's a brand new company, I usually don't do much analysis. And I learn it as I do the video. Sometimes I will stop the video and then learn about the company more, because there's something new about it that I wasn't sure, or I didn't understand something in the financials. Sometimes I have to stop the video or pause it. Hey, Blade. What's up? Good to see you. So I'll just show you step by step how I create my DCF. And I'm happy to send you a DCF too. It's pretty easy. You can just Google it. I kind of created it based off of the basics, how a DCF works, and then I kind of altered it to the way I like it. So I just have in my Excel file, tab 1 is the DCF model. I'm actually working on Palantir and MPLX right now. I figure I'll just do Palantir as an example. Tab 2 is just some info. So if I have to respond to a comment or write something in the description of video, I have it all here. And some things so I don't forget, when I talk about certain companies, I don't forget some facts. So I just have some info here, like a junior minor. If you ever hear me give these long, drawn out talks about a topic, sometimes I write it down and read from the script until I memorize it. Tab 3 is all the tickers I've ever done. There's over 1,000. How many are there? Like 12, 1,300. Oh, not even 1,002 tickers. There's a lot of tickers I've done multiple times. Some tickers I've made 10 videos on. Probably energy transfer, I probably did 10 videos on. And I just keep data in this file. So when I do the industry comparison, I'll pull the data for the company I'm working on. I'm not invested in Nike. Nike, I like it. I'm just not sure. I'm not sure if I would invest in it. I'm not totally sold on Nike. They used to be the king, and it's come down a lot, so it's a good valuation. But yeah, I'm not 100% on board with Nike. And the 4th tab is the industry comparison. So I'll show you how I gather everything, including the industry comparison. And I'll show you all the calculations. I'm really good at Excel. I mean, I've done it. My first job, my first real job, I mean, I was a paper boy and had other jobs. I worked as an intern in the World Trade Center, actually. And I always remember it because I started working as an intern in the World Trade Center right when they bombed the World Trade Center. The first bombing in 1993. 8 people died in that bombing. So it wasn't really as significant as 2001. But as soon as I started working there, it was right when they bombed it. So I'll never forget it. It was in '93. It was in 5 World Trade Center. Now it's gone, 5 World Trade Center. 5 World Trade Center didn't collapse, but it got beat up with all the debris from 1 and 2 falling down. So it ended up getting taken down. But I've been using Excel since that job. So I started that job in '93, and I worked in like the mailroom, like doing like delivering like mail to people and like copying things. So I did that for like a year or so, maybe a year and a half. Then my second year I worked, and that's when I did Excel. I had to actually work, and I was working on a foreign currency department, so the foreign currency trading. So it was really interesting. I learned a lot because I knew nothing at that point. So I started. So that was 94. So 30 years of Excel. So I know it inside and out. Subaru looks like a value investor's dream. Subaru. I don't know if I ever did a video on Subaru. Okay. I talk too much. That's probably why people click off the video. So it's pretty easy. Obviously, it's easy for me, but you can do something similar. So the first step is I just copy tab 1, because this is the format I'm going to use to build my Excel file to go through the videos. And then I'll just rename it. I would put PLTR, the ticker. I already have a ticker named PLTR, but I have to put the ticker name because it's all linked. It's linked to this tab. So PLTR is linked. You can see the formula because it's pulling the data from this tab into right here. And then I'm going to use the data in here when I do my industry comparison. Because when I do the industry comparison, I'm going to show you how I get the data, but I download it for all the companies. Let me do MPLX. Since I'm working on MPLX now, I'm actually working on both. And it's already up here, so I don't have to change this part. I'll show you when I get to that step. I don't want to make it more confusing than it is. Okay, so I have the Excel file. It's all, the kind of like I guess if it was like a house, the foundation is set. So there's no house, there's no structure yet, but this is the foundation for the house. Now I have to start building. And there's some date. I just put today's date, 11/8. And I always change this to black. My MPLX, yeah, they're a good company, MPLX. I like midstream stocks. Okay. So usually I go to Yahoo Finance. I don't pay for anything. Well, that's not true, but you can get all this data without paying for it. A lot of the websites will charge you a fee because they organize the data in certain ways, so it's easy for you to look at. But for the longest time, I've been just using the data from Yahoo Finance and going through like the 10K and 10Q. The only reason I got Simply Wall Street, and I do pay for Simply Wall Street, is so I can compare. I can show you like another valuation. But I'll go through it. So I go to Yahoo Finance, copy the ticker, the company name, which just happens to be the ticker. And then I take the current stock price. So today it's trading at $46.14. And make sure you email me. I'm happy to share any of this stuff for free. Because it didn't cost me anything. I just built it in Excel myself. I need the market cap, which is 47 billion. And I just put it into this cell. I put in 47.018, and then now it populates this cell. This cell right here, I'll highlight this cell in orange. So this cell equals this cell times 1 billion. So it's easy to type. So if a company had 750 million market cap, I would just type in this cell 0.75, and now it's 750 because all the numbers are in millions. There's so many steps. I don't do it in a certain order, but I'm going to try to do it so it's clear. And then on the side, you never see the stuff on the side here. You only see like this, and you'll see this. The stuff on the side, see, you have to put the ticker in here, MPLX. And then month is the latest month. The latest month, the financials are on Yahoo Finance. I know the latest month, but if you go to the financials in Yahoo Finance, it shows you their annual financials, right? 21, 22, and 23, and trailing 12 months. So to find out their latest financials, you just hit the quarterly section right here, and it says their latest financials in Yahoo Finances as of 9/30. So that's the latest financials I'm going to put into my model. So in the month here, I just type in 9 for 9/30. So I put the ticker and 9. And now this auto-populates this cell. This is a formula, this top cell. It puts the words, you can see up here, discounted cash flow model, millions, and then the word ticker, and then it looks in the cell Q2. And cell Q2 is right here, MPLX. So it writes this word, discounted cash flow model, in parentheses, millions, then in parentheses, ticker, colon, and then whatever's in that word. See, it says MPLX. Like if I put my name by accident, it would just say ticker Scott. And like I said, email me if you want to know the formula or anything. And then after that phrase, I'm putting 3 dashes, dash, 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 then the word latest and the word financials. And then this is a formula. So it calculates the date. So on the top of my screen, it always says discounted cash flow model, millions, like all the numbers are millions, like 16 million shares, 750 million market cap. Let me change that back so I don't forget. And then it says latest financials, 9/30/2024. So I just have to put the ticker in this box and the month in this box. And that's how it populates this formula. Like if I put 1 in here, you have to refresh this, but it says latest financials 1/31/2024. Let me put it back to 9. Yeah, Alex, that's interesting. I see a lot of those reaction videos. Maybe I'll do that. I don't know. What happened? Okay. So where was I? So in this first screen, I can see that the dividend on Yahoo Finance, 8.13%. So I just copy that. And then I go to this box where it says dividend yield. Let me do step by step because I don't want it to be too confusing by jumping around. Okay, so after this first screen, then I go to profile in Yahoo Finance. In the sector, I copy the sector, energy. And then I copy the industry, oil and gas midstream. And then I copy the city and state, Findlay, Ohio. I put that in location. This is a little weird. They don't list the number of employees at the company, and it's usually listed right here, the employee count. I'll just Google it. How many employees at MPLX? 5810. So usually that does it. $58.10. I think once I couldn't find the employee count anywhere, even Googling it. So once I went to LinkedIn, maybe twice it was. And actually, I typed in the name of the company. And then I think somewhere on LinkedIn, it says how many employees are connected to the LinkedIn profile for the company. So I put the number of employees, but it's almost always listed on Yahoo Finance. And this is because it's a master limited partnership. So I think it's part of Marathon Petroleum. So there's actually no employees at MPLX. They're all part of Marathon Petroleum, but anyway, so let me see. Okay, so I have that. I still need to fill in those two, which I'll show you later. Then I go to financials. And I usually start with cash flow. So I go to the cash flow section. And then I get free cash flow. Oh, actually, no, there's another step. So the free cash, all their financials are 2021, 2022, 2023, and trailing 12 months. Those are the four. I'll copy. Those are the 4 time periods I'm copying for. So I put free cash flows on the top row right here. So I put it right here. So I put it across here. Actually, Yahoo Finance changed things. So when I paste in the values, it goes down. It goes vertical. I don't know what the old Yahoo Finance used to go across. Now it goes vertical when I paste it in. So these are the 4 numbers I just pasted in. But in order to get it horizontal, these are all like this is a formula. So it's looking in this cell. And this is a formula. It's looking in this cell. So these are the time periods I'm looking for. I'm pulling for 21, 22, 23, and trailing 12 months. Those are the 4 time periods. So I have to update this here with those time periods. So I go all the way to right. And these are all the possible time periods it will be. So it's the top one, 2021, 2022, 2023, and trailing 12 months. Those are the 4 time periods for this company. Other companies, some companies have completed their 2024 fiscal year. I think Microsoft is not on a regular calendar year. Some companies' fiscal year ends in March, some ends in June. For those companies, I would have to copy down here. So I'll copy this top row, and I'm just going to paste the values into here. So now I know what values I'm looking for. So you see 2021, free cash flow, 4.4 billion. 2021, 4.4 billion. You see trailing 12 month, 4.7 billion. 4.7 billion. So now it coincides with what it is. And this is all formula driven. So this cell equals F16. F16 is down here. This cell, which I show which you see in the video. And this is a formula. This is looking at cell K16 times 1,000. So this is K1. So this is K16. And the reason it's times 1,000 is because Yahoo Finance, all numbers are in thousands. These are not actual numbers. These are in thousands. So they just cut off the last 3 zeros. Yeah, I do pay for Simply Wall Street. I think it's like $25-30 a month. I don't think they should charge me because every video I promote Simply Wall Street, but whatever. I'm not gonna fight them on that. It's not that much money. But for some reason, oh yeah, so Simply Wall Street lists it most current to oldest. So the trailing 12 months, then 2023, then 2022, then 2021. I just change it in order. There's no it's just a preference. So I like to see it 2021, then 2022, then 2023, then trailing 12 months. So I just kind of flipped it when I did the formulas. Okay. Now I go to the income statement. And I copy the net income. So I copy these 4 numbers, and it's the same time period, 2021, 22, 23, trailing 12 months. And that's this row is net income. So I just put in the text. So now it goes across here and now pulls into here. So you see trailing 12-month net income, 4.3 billion. Trailing 12-month net income, 4.3 billion. Same thing with the revenue. I copy. So now all my financials are in here. And then I just get rid of this. Well, I don't delete the numbers, but I just hide it. So I'll copy this. I'll copy this cell right here. and I'll just paste I just formatted it so it's all black, like the font is black, so you just can't see it. So when I do the video, it's cleaner. So I have my financials in there. So I'm done with Yahoo Finance. Now I go to Simply Wall Street. I type in MPLX. And then I go to About the Company, which just brings it down a little bit. It shows me the year the company was founded in 2012. So I copy that. Founded in 2012. Then I go to future growth because I need the future free cash flows. I used to do all this myself. I used to estimate it all myself. I still do sometimes, but sometimes I don't use these numbers. So this chart down here shows you revenue from 2021, and it shows you the analyst forecasted revenue. I'll use free cash flow. So what's the free cash flow for 2024? Well, no one knows because it's they just completed third quarter 2024. But 4 analysts project their free cash flow for 2024 to be 4.084 billion. So I put that in the model here. I just put it right here, 4.084. That's year 1 forecast. And then year 2, which is 2025, 5 analysts project 4.811 billion. And now get third forecasted year, 3 analysts, 4.981 billion. So these numbers are now in my model. The 3 numbers I just put in. And the 4th number is 2027. It's just my calculation. The way I figured out the 4th year, it was just I use a similar growth rate from the prior 2 years. And sometimes I'll change this. I might even change these numbers too, the future free cash flows for the next 4 years, because we all have our own opinion on things. So this is just my opinion. So I have the future free cash flows. I need the WACC because that's a discount rate. That's how you calculate the terminal value, and you also have to discount the future free cash flows using the WACC. I used to calculate the WACC myself. It took about 10, 15 minutes to do it. Sometimes I go to Finbox. It's a free website. Type in the ticker, MPLX, and then go to models, and then go to cost of capital. So this ranges from 9.3 to 11. So depending how I feel, do I think 9.3? If I want to be conservative, the higher the WACC, the lower the value. So let's pretend 9 or 11. So if I put 9 in here, the value of the company is 73 billion, but it's actually trading at 47 billion. So it's pretty undervalued. If I raise it to 11, it's still undervalued, but now the company's worth 56 billion according to my model. So depending on a lot of factors. I usually go in the middle. Sometimes I'll go even lower than Simply Wall Street. Terminal value is because the whole purpose of the DCF is to project the future free cash flows. Let me see if I can do this. Where it's a little, it's a little kind of confusing trying to explain it for a stock. I've explained it a bunch of times. I hope I could finally do it where it's clear. Okay, so let's just say I want to borrow money from you. So you could think of it as an investment too, because obviously if I borrow money from you, you're going to want at least that much money back. I'm not going to get it for free. So I tell you, I really need $300. I got to pay. I have a bill I have to pay, and I need the funds to. So can I borrow $300? And then you said, well, what's in it for me? Like, why would I just give you 300? And I said, well, obviously I can't pay you back right away. I need a little more time. So if I give you $100 for the next 3 years, then you get your $300 back. So if I give you $100 in 2025, 100 in 2026, 100 in 2027, you get your $300 back. But you're thinking more of it as an investor. You know, if it's like your mother, you might just give her the 300 and not even charge her anything. But you know, we're just kind of acquaintances. We're not even good friends. So you're not going to obviously just give me the money. And even this you wouldn't do. Because you're like, well, I could just put $300. Right now I get 4% at my bank. So if you present value those funds, how much is it worth in today's dollars? So that's pretty much what I'm doing. So if you want to do the math correctly, you would say, listen, I'm not going to give you $300 and then you give me $300. I'm not going to give you $300 and then you give me $100 for the next 3 years, because in 2027, when you give me $100, that's like equivalent to $89 today, because you get a 4% return. So you said the only way you'll do this deal is if you'll give me $278. And then I'm going to still have to owe you $100 for the next 3 years. At least you're getting back what the bank would give you. Because so that's the discount rate. The WACC is a discount rate because if we expect free cash flow to be 4.1 billion in 2024, that's equivalent to $3.7 billion today. Because money loses value over time, right? So even though we're projecting 5.2 billion of free cash flow in 2027, that's equivalent to 3.5 billion in today's dollars. Because we're trying to get what is a company worth in today's dollars? It's worth 63 billion. The same thing as you're saying, in today's dollars, that 300 bucks is equivalent to $278 today. Because there's no way you would give me 300 bucks and I'll give you $300 back over 3 years. You're losing money. So the only way to make it even for you is you'll give me $278, so you save 22 bucks. And then I have to give you $100 back over the next 3 years. That's a 4% return. But but I'm not a bank, so I'm much more risky of investment than a bank. So you would charge me a lot higher return. So you would say, well, at a 10% discount rate. So that's the return I want. I want to get 10% return. So I'll give you $249 today, but you have to give me the $300 back over 3 years because I want a 10% return because I'm taking a risk. So that's like the WACC. It's the risk. So if we were doing like a really secure company like Apple, they would have a low WACC. It's a low risk. Maybe I explained that too much. So that's a discount rate for the cash flows, the WACC. The terminal value is all the cash flows beyond a certain point. So we can't like project 20, 30 years of free cash flows. So most models just project up to a certain point. So I projected 4 years of free cash flows, the next 4 years, and then all cash flows beyond that. And that comes out to 70 billion. And this is the formula right here. It's taking 5.2 billion, which is the last projection of free cash flow, plus 1 plus Q4. And Q4 is the growth rate divided by E12 minus Q4, and E12 is the WACC minus the growth rate. Simply Wall Street does the same thing. But in order to really grasp it, you gotta try to do it yourself, and then it'll really sink in. You can watch videos and you'll learn it, but once you start like actually creating it yourself, Simply Wall Street, they also have a similar DCF, and they do a terminal value, which is the same formula. It takes the last free cash flow year times 1 plus the growth rate divided by the discount rate minus the growth rate. It's definitely not intuitive or straightforward. So it's just it's like anything. You just got to do it a bunch, and then it starts to make a lot of sense. Okay, so that's why when it's a really high WACC, you're going to get a lower value. Just like down here, Like the bank is only giving you a 4% return. So that's why if you put $278 into a bank today, it's equivalent to $300 3 years from now. Because it's only a 4% return, right? Where if you were charging me like 15%, then $228 today is equivalent to $300 3 years from now. It does. Especially stuff like this, like it's not straightforward. It doesn't just like, oh, because if you said to me, what does net income mean? And I could probably explain it where it kind of makes sense. It's your total sales as a business, all the sales you make minus all the expenses of the business. Expenses are payroll, rent, etc. That kind of like makes more sense. But stuff like this is not going to be intuitive. It took me a while. It took me a good of doing the channel, of doing like a whack and calculating it on my own. It took me a good year to kind of grasp it and learn how to like, because initially when you learn about a company, like if you want to value a company, you have to really understand it really, really well. And how can you value something if you don't even understand, like if you don't understand what the company does? How do they generate sales? And you can't even explain it. How are you going to value them? But even if you could understand a lot of things, then you have to understand stuff like this. It can get real confusing. But like I said, I think I made a video on whack. Yeah, everybody, thanks for the nice comments about the dog. It was last night we euthanized him. So yeah, it was tough. He was with us pretty much since the beginning. Okay, so I have the Excel file pretty much set up, at least the core information. Then I put a description of the company in here. So about the company, this is simply Wall Street, and then I'll just copy everything about the company I put into this box. And I just kind of like, and I edit this to make it a little more straightforward. So when I talk about it, so this is what I say this in the video. So I'll look at this MPLX. Maybe I'll just get rid of this. Has two segments: logistics and storage, and gathering and processing. Because I just want to give a high level on what they do. It gathers, processes, and transports natural gas, crude oil, and refined products. And sometimes I'll Google it, I'll write my own thing. This is just when I talk about it in the beginning. The company is incorporated in 2012. Headquartered Court in Findlay, Ohio. You don't ever see this part. This is when I do the B-roll footage on the screen. But I'll get to it when I... Okay. So there's a website I go to. It's called stocksplithistory.com, stock split history. And I enter the ticker MPLX. And this shows me how much you would have if you put $10,000 into the stock. So I take a screenshot of that and put it in my Excel file. Yeah, so this website, it shows you any stock splits. They didn't have any. And it says, if you put $10,000 into this company in 2014, exactly 10 years ago, and you reinvested the dividends, this is where your money would go. You would be down a lot. At one point, you'd be at 3,000. But if you still held on from 10 years ago, you'd be at almost $16,000 today. So that means if you picked it up here at 3,000, you spent $3,000, you could have 5x. You could have 5x your money, 400% growth. It would have been 16,000. This was in April 2020, when oil crashed. Remember when oil was negative, oil prices? So this chart right here, start date 11/11. So if you put 10K on 11/11/2014, as of today is the end date. And it shows you the share price to start to end, the number of shares, the dividend, your total return. So that's a 57% return from this point to this point. It includes dividends. Like if you did put $10,000 into this company 10 years ago, in your brokerage account, you would probably you might not even have 10,000. You might have like 9,000. Because in your brokerage account, your dividends, you would get paid dividends, and then you would use that money to do whatever, go out. But the actual value of the stock would probably be like 8,000, 9,000. But this is assuming you'd put all the dividends back into MPLX and bought more stock. So 57% return, which is how you should look at it. Now, if you did not reinvest the dividends into the stock, like you used the money for something else, you would have 10,700. So you would have been better off reinvesting back into the stock because they pay a big dividend. It's just more information to show you. That's why I started using this. Now the next step, I need to get the industry, all the companies in the industry. So I go to this website. It's called businessquant.com. They actually gave me a free login. I never heard about this site. Like 3 years ago, the guys who started this website, they emailed me and they said, can you use our website? It's free for you. Can you use it? And obviously they want me to talk about it. I like it. I just really use it for this industry analysis mainly. So I go to the industry financials, and it's every industry is here. So I just pick the industry I want, oil and gas midstream. And then I'll choose what I want to see. Everything's here. current liabilities, dividend growth the past year, the past quarter, dividend CAGR. You have EBIAT. EBITDA, EBIT. I mean, it's just so much info. So I pick all the columns I want, and then I download it. I hit export. It goes to Excel. I'll just export this, even though this is not. I didn't pick the columns, but, and I just copy this, and then I paste it in here. I just did this yesterday when I was preparing for MPLX, because MPLX is all set up. So I paste it in here, all the columns I want, and then it populates this chart. And like this, like usually it's not on MPLX. The green line is the stock I'm doing. It might be somewhere else over here. So I would just copy the green line onto the stock I'm doing. I would just clean that up so it's the same formatting as everything else. And now I have it kind of highlighted. So when I do the video, you can see MPLX. And I have to change the colors so it coincides with whether it's better or worse than the median. And all these cells for MPLX, like, okay, right here is market cap. So of course that website gives you market cap, but I like to just pull in the market cap on my Excel file, because sometimes this website is like yesterday's numbers or a few days ago. Like you can see the market cap for MPLX is 47.2 billion. I have 47.9 billion. So this is probably like a day old or 2 days old, the data. So all these formulas look into either the MPLX tab or look into this tab. To pull in the correct number. So I know the ticker I'm doing has all the latest information. And some of these cells are calculated, like this cell right here, price over free cash flow. It's just a calculation. It takes H, 13 market cap over free cash flow. 10.1 price over free cash flow. So MPLX is trading at 10 times free cash flow, which means their market cap is 10 times their free cash flow. And it should match Business Quant. Business Quant is right here, 9.96. It's pretty close to 10.1. I just calculate it because I just want to make sure. Once in a blue moon, this website is wrong. The data, like it could be the data is really old or on a particular ticker. But usually it's up to date on most things. And then I change the highlighting because up here, this up here is the best in the industry. So if I want to highlight who spends the most in CapEx. So 5.7 billion. Whoever's at 5.2 billion, which is right here. So then I just highlight it yellow, so it just stands out when I do the video. So I highlight all the best ones. And I copy the chart. I make sure to update the industry. Once in a while, I'll forget that. Update the number of tickers. There's 45 tickers in this industry. And then I paste the chart here. So I'm pretty much done with the Excel file. The only thing, come on. Now I got to do the summary. So all this, I need to update this, obviously, but this is all pulled in from other tabs. The price multiples, the free cash flow and revenue, that's all pulled in from either this tab or other tabs. And then whatever I come up with, like I think about like what's their ranking as a company. I kind of look at like, is it over or undervalued? And then just kind of like my opinion. So let's just say I say, oh, that's 6, that's 7. That's more arbitrary, kind of like the ranking and what I buy it. But ratios is, and financials, it's really predicated on their actual ratios of financials. So I'll look at the median and compare it to MPLX. Mainly PE and price to free cash flow. Those are the two main like indicators of ratio. So PE, they have a better PE. It's lower than the median in the industry. Price to free cash flow is a little higher. So it looks good. I'll give them a 6. Financials, I see like free cash flow is only up 8% since 2021. Revenue is up 12%. So maybe I'll give them a 6 or something. And then I just hide these numbers up here. So when I do the video, you can see the result. Somebody suggested that one video. And then the last step, the last before I shoot the video is I get their latest 10Q or the latest investor slides. So I go to the website, go to investor relations. Sometimes I got to figure out where it is. So investors, and this is MPLX's third quarter financial results. Let's see what this is. I like the presentation slides. They're a little easy to look at. I'll just pull the latest 10Q. So I go to the SEC filings, and then I'll save it to my desktop, the latest 10Q. So I'm pretty much done with setting it up. It usually takes me 10 to 15 minutes to set it up. And then I just make it so the screen's bigger. I make this row really wide. I'll show you why. And now I just go through the video. So I'll just say, so do you think MPLX is a buy or a sell? Let's get started with the model. Large cap company, 47 billion market cap. They're trading at $46 a share, and they have 1 billion shares outstanding. So you only see this. And then I have B-roll footage. While the B-roll footage is playing, I'll just read this. MPLX has two segments. They operate in crude oil, refined products. They were incorporated in 2012, headquartered in Findlay, Ohio. And then I'll scroll here. And then I get this set up. And then I go, let's take a look at their financials. And then I go through all their financials, their free cash flow. I may mention the margins, net income, revenue. And I did put, remember in the beginning, I put the dividend yield here, 8.13%. It's a high dividend, right? And when I put that in here, I can calculate how much they pay in dividends, how much it cost them. Because it cost them 8.13% times the market cap up here. So the value of the company is 47 billion. They pay out 8% in annual dividends. So 8% times 47 billion equals 3.8 billion. That's how much they pay in dividends to all their shareholders. And then if you look, if they pay 3.8 billion and they actually generate 4.7 billion of free cash flow, then they could cover their dividend 1.2 times, because 1.2 is 4.7 over 3.8. So they can cover it, but there's not much room. Like you'd want to see a coverage of 2 or 3 or 10, because then there's no risk of them cutting their dividend because they can't afford it. But as long as it's above 1, hopefully they won't cut their dividend. And then I go back to this. Well, first I have to copy down here and paste the values up here, so we get rid of the blue. And then I say, we estimated 4 years of future free cash flows, estimated terminal value. The value of the company is 60 billion divided by 1 billion shares. And then I have to get rid of the black here. So I just copy these 3 cells and then put the formatting there. So we get a value of $62. They're trading at 46, 26% discount. And then I do the industry comparison. So obviously I edit this out as I'm moving over. I make this a little bigger. I say there are 45 companies in the same industry as MPLX, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. And I go through all their stats, and I may mention they rank 7th in market cap at 48 billion. Enbridge, the Canadian company, is number 1. So I may mention other companies as I'm doing it. Then I get rid of that. I say, if you put $10,000 into this company 10 years ago and reinvested the dividends, you'd have $15,000 today, a 57% return. Then I do a summary. To summarize, I have them trading at a 26% discount. Would I buy it? Their ratio is 6 out of 10. I explain why I gave it a 6. And then when I'm done with that, I open up their 10Q. I usually go through the income statement to start. Is this there? Wait, let me. I guess that's. So I go through an income statement to start. I talk about their revenue, how they generate revenue, talk about their expenses, and then a profit. I mentioned shares outstanding, if they added or bought back shares. I go through the balance sheet, talk about their assets, their liabilities, and then how much equity they have. Then I do the statement of cash flows, talk about the 3 sections: operating cash flow, investing, and financing, and talk about the numbers, if they added debt, if they paid back debt, how much they paid in dividends. Then I close that. Then I go to Simply Wall Street. I mentioned some high-level things on Simply Wall Street. I show Simply Wall Street's valuation. They say they're really undervalued, $93. Analyst targets, 16 analysts have a stock price of 48. And I go through a lot of different things here. I talk about insider buying and selling, the CEO salary, debt and equity, who owns the stock, is it insiders, institutions, the top shareholders, the parent company is Marathon Petroleum. I mentioned that earlier. And where they trade. So that's the process from start to finish. Well, someone asked me to do that. So that's it. Maybe I'll make a video on it and just edit out all the, the kind of the dead parts. But yeah, thanks for watching, and I'll talk to you later. Feel free to email me.